Hello everyone, this is Paul Prescott for Norstar Trader. This is the first trading day of the year, but I'd like to just take a quick look back at last year's performance. As you can see, the first portfolio performance chart we have up here is the ETFs. You'll see the Dow, mid caps, the Q, the Spider, home builders. So we have ETFs plus we have sectors of ETFs. And as you can see, we did a 27.5, 28% return, which is fantastic for that for the ETFs. So let's go in and take a look at some of these ETFs to see how they performed. First one up is the DIA, which is the Dow. This is a 2-year chart. You can see back here, this was the COVID crash and then the recovery. Some of you know that our Norstar system is taking this cyan line, and as long as it's over what we call the bull-bear line, these are indicators that we created. As long as it's over there, you stay in the trade. So it just so happens that you never had to get out of the stock, and you can still be in it today because the cyan line never crossed below the bull-bear line. Came in, got a little close, skimmed it in October, and then one more time in December, and then continued its way up. And that's how we got a 28% return without ever trading the ETF once. Let's go take a look at the Spider, which should be very similar. And it is. In fact, it performed even better. Again, this was the COVID crash back here. Now here, let's take a quick look at that. So we see the cyan line crossing down below the bull-bear line. This is back in 2020 when we got the crash. We would have gotten out on one of these candles here, so we don't ride it all the way down. And then we would get back in on a higher low right here. What does it mean by higher low? Well, you can see this is a lower low, and that's a lower low, and this is the first higher low, and that's where you get back in the trade. And then you hope that the cyan line gets up above the bull-bear line again, which it did, and you're off to the races, and you just keep going. Once you cross back over, you just stay in the trade until it crosses back under, and that happened. Never came back in again all that time. So let's just zoom out for a second here. We're just going to focus in on this last year, and this was a fantastic trade. If you would have purchased it like we did here at the beginning, you're talking 28.5% return just on the Spider alone, which is the S&P 500. Let's take a look at another one, the QQQ. Again, fantastic return. We'll zoom in just on this 1 year. And again, the cyan line never crossed below the bull-bear line, and it's off to the races. So that's what we do. We take these indicators that we've created, and we just make sure that our bottom is taken care of. So, in case the bottom of the stock drops out, we get out of the position, just wait for it to recover, wait for the trend to go in our favor. And these are all higher lows, as you can see here. Every one of these is a higher low all on its way up. Here was one lower low, but it never crossed below the bull-bear line. And this is where we stand today. Now, we also have a portfolio of stocks. This is a list of the top 100 hedge fund holdings. So we have the best hedge funds, and these are the stocks that they're all buying. And in order, this is the stocks that they own the most of. And this is where we get our picks from. And as you can see, these are the major corporations, major multinational corporations: Facebook, Microsoft, Amazon, Google, Visa, MasterCard, JP Morgan, Bank of America. So plenty to choose from here. So they're doing the fundamental vetting, and we're doing the technical analysis. And we just think it's a great combination. They do all the heavy lifting in terms of fundamentally whether the company is looking good for the future, and then we just take care of it from a technical perspective. Now, if you take a company like Baba, which is on their list, we know that Alibaba hasn't been doing well. So this is where technical trading saves you from investing even in a top hedge fund holding. As we said, we would have gotten out here, maybe back in again, just maybe get back in again. We have to look at our other indicators, which actually I'm looking quickly here. It told us not to. But even if you did, you'd be out again here, and you would never have gotten back into Alibaba on this whole ride down. From 249 down to 120. That's why what we do here has some value, because you would never have ridden Alibaba down this entire way. Let's take a look at another one. One that we've been trading is Apple. We can actually look at it inside of our stock portfolio for the past year, and you can see Apple's done quite well. Did a 39% return for 1 year. Look at Nvidia, unbelievable return. Tesla, unbelievable return. Now you can see Amazon and Facebook didn't do much, but it didn't really affect the overall portfolio because we still did close to a 39% return. So let's take a look at Apple real quickly. And you can see, using the system, cyan line over the bull bear line, never a real threat. You hold on to Apple and you keep riding it, and you'd still be in it today. So there you have it. It's a very simple system that we developed. It wasn't simple to develop. It's a simple system to look at, to view. If you want to peek over our shoulders, we don't recommend any stocks to anyone. You have to go to your broker for that. But if you want to look at over our shoulders, we do have a Patreon account where you can look at our portfolios. You can look at our stock portfolio, and you can look at our ETF portfolio, and we'll give you the history on the buy and sell positions and when we do it. If there are any stocks that you are interested in, leave a comment down below, and we'll be glad to take a look at them on the next time we post a video, which should be at the end of the week. All right, so that's it. Thank you for watching. Remember to hit the subscribe button. It really helps us out a lot. All right, thanks for watching. Bye-bye now.